The stock market will be crashing, and I have evidence to prove it likely. I know that it sounds bold, but these signals are too significant to overlook. If you're as invested in crypto or stocks as I am, you'll want to pay attention because the correlations I'll be discussing in this video are incredibly valuable for any investor. But before I'm getting into this, I want to add that I'm not a licensed broker nor a financial advisor. I'm just a dude making crypto videos for the sake of entertainment. I'm going to present to you 4 indicators that tells me that the stock market will likely crash in the coming months. Let's get into it. Number 1. US Fed interest rates. We're all familiar with the idea that when the US Federal Reserve cuts interest rates, it typically results in an expansion of the stock market. This is because lower Fed interest rates lead to lower bank interest rates, reducing the cost of borrowing for both individuals and companies. And on paper, does this sound great? But what if I told you that this isn't the case when we look at economical data? If we look at these 2 charts, the orange one being the United States federal interest rate and the upper one being the Dow Jones Industrial Average, we can see that whenever the Fed cuts the interest rates, we see a drop in the stock market. And whenever the Fed hikes the interest rates, the stock market expands. This correlation has been occurring for the last 25 years. Let me show you. August 98 to November 98 was the Fed interest rate cut. The Dow Jones fell by 16%. May 99 to May 2000 was the Fed interest rate hiked. The Dow Jones increased by 0.84%. December 2000 to June 2003 was the Fed interest rate cut. The Dow Jones fell by 19%. May 2004 to June 2006 was the Fed interest rate hiked. The Dow Jones increased by 11%. August 2007 to December 2008 was the Fed interest rate cut. The Dow Jones fell by 34%. November 2015 to December 2018 was the Fed interest rate hiked. The Dow Jones increased by 35.5%. June 2019 to March 2020 was the Fed interest rate cut. The Dow Jones fell by 17.6%. February 2022 to July 2023 was the Fed interest rate hiked. The Dow Jones increased by 5.17%. Do you see the correlation? These are no rough estimates, but precisely measured from when the Fed interest rate was cut or hiked. History tends to repeat itself, and this pattern has been evident for over the past 25 years. While this trend remains strong today, its longevity remains unclear. Only time will tell. Number 2. Gold not coming down. Gold has always been viewed as a secure commodity during times of economic uncertainty. It tends to trade low when the global economy is stable and rise during periods of worry or trouble. We can see examples of this if we look at the 2008 mortgage bubble or before and after the 2002 dot-com bubble and the OPEC oil price shock in 1973. Today, we observe gold reaching a new all-time high, while the stock market is also at its peak. Such simultaneous behavior is typically rare and short-lived. This raises the question, which one is false signal? The outcome remains to be seen. Number 3. The Russell 2000. The Russell 2000 is a collection of the USA's 2,000 smallest publicly traded companies. It is typically compared with the S&P 500 to get insight where capital is flowing. Typically, both the Russell 2000 and the S&P 500 tend to move in sync. However, there has been a notable divergence in recent times. Historically, has both the Russell 2000 and the S&P 500 often reached new all-time highs almost simultaneously. However, today, while the S&P 500 continues to surge to new all-time highs, the Russell 2000 is lagging. This sets this bull run apart from the ones we've seen before. The last time we saw the Russell lagging like this was between 1998 and 2000, just before the dot-com bubble burst. Back then, it took the Russell 400 days longer than the S&P 500 to hit a new all-time high. Today, has it lagged by 200 days so far? We can ask ourselves the question why money isn't flowing into all sectors of the economy today. Is it because of a bigger fundamental problem in the economy, like worsened business climate for smaller companies or lack of trust or resources from the people? I don't know what is causing this anomaly. Number 4. The crypto market. The crypto market and the stock market has always been highly correlated. Just look at the S&P 500 compared to the total crypto market cap during the last 15 years from a monthly perspective. Each time the S&P 500 has had a peak, crypto has peaked as well, and vice versa. Let me show you. At the beginning of 2018, both the S&P 500 and the crypto market reached new all-time highs. By the end of 2018, both had hit their lowest point of the year. In early 2020, the S&P 500 reached a new all-time high, and the crypto market also saw a local peak. Shortly after, both markets crashed and hit their lowest point simultaneously. In late 2021, both markets reached all-time highs around the same time. By late 2022, both the crypto market and the S&P 500 hit their lowest points almost simultaneously. Crypto and stocks are highly correlated, and in my opinion, does the crypto industry remind me more of a tech stock than an asset class. But anyways, let's get to my point. If we measure from when Bitcoin hits a new all-time high to when Bitcoin has hit its peak, we can see that historically has bull runs been going on for 28 days, 231 days, and 126 days. Bitcoin reached a new all-time high 93 days ago, so if we assume that Bitcoin follows its historical pattern and doesn't surpass its typical bull run duration of 231 days or less, we might only have about 4 months left of the crypto bull market. This time frame suggests that the stock market's strong performance may also be limited to the same extent. Additionally, this aligns with the anticipated US Federal Reserve rate cuts expected to happen within 3 to 4 months. In August, there's a 35.2% chance of the interest rate remaining unchanged and a 51.8% chance of the rate being cut. By November, there's a 23.1% chance of the interest rate being kept and a 46.1% chance of the rate being cut. So, if you've enjoyed today's video and you found it giving, then please leave a like. Since I am a really small channel, all types of support really matter now in the beginning. This is just my own personal theory and should not be taken as facts, but just as pure speculation. Don't forget to leave a comment down below if you have any questions or want to let me know about something that I've missed. But anyways, thank you so much for watching, take care, and bye.